Hello everyone, welcome to another video on Tradetron. In this video, I will show you one strategy that was shown by Theta Gainers in his channel. We will cover this strategy in detail, try to understand how to build that strategy. After that, we will see how you can duplicate this strategy and run it on paper trade or on live trade or backtest it on your account on Tradetron. And then we will see how exactly can you build this strategy and how have I built this strategy, what keywords have I used, what logic have I placed in this strategy, so that you can learn better about how to build strategies, how to build complex strategies on Tradetron. So without any further ado, let's go to the screen. But before that, I will make a follow-up video to this video on the backtest of this strategy. If you comment backtest at the comment section of this video. So if I get more than 100 backtest comments, I will make that backtest video and we will then see how this strategy fared well historically. So let's go to the screen and understand how exactly what is the strategy that we are looking at. So let's understand the first part of the video, which is understanding what exactly is this strategy. Now, like you can see, I have the Nifty 50 spot index chart open on Tradetron. And in this chart, I have basically two indicators that I've added. One indicator is basically the 20 EMA, which he recommends. And the second indicator is basically the super trend 10 3.5 that he recommends. All right. Now, what are the conditions that we are looking at for our strategy? Now, basically, broadly, the conditions that we are looking at is that we are looking at two different types of entries. One is that we are looking at a positional strategy where we are taking long and short entries. And for each of the entries, we are having long exits and short exits. When are we taking our long entries? We are basically taking our long entries at such points. So you can see that we are basically first looking for the condition that the close has to be above the 20 EMA. So like you can see in this case, the close out here is basically more than the 20 EMA. So this blue line is basically the 20 EMA line and our close is more than the 20 EMA. Similarly out here, the close is more than the 20 EMA. So whenever close is more than 20 EMA, we are looking at that as a signal. And with that, there has to be another condition that the super trend is in green. Now, when exactly is super trend green? The super trend is green when the close is again above the super trend line. So out here, you can see throughout this period, the super trend out here is green every time the close is basically above that super trend line. So two conditions out here. First condition, close has to be above 20 EMA and super trend has to be green. In that condition, whenever something like this happens, we would basically trigger a long trade. So for example, out here, this is one example of where the strategy would basically trigger an entry. Now, in this entry, we are basically taking a, like whenever we have a long signal, we are taking a long trade, which is nothing but a bull put spread. A bull put spread is nothing but a credit spread where we are receiving credit. So we are selling a more expensive put option and then we are buying a lesser or a cheaper put option in order to hedge it. In his case, Rayansh recommends you take a 40 delta, a negative 40 delta put and a negative 25 delta call, a put as the hedge. So you short a 40 delta and you buy a 20 delta put. That is for the long entry. Now for the exit conditions are basically the exact opposite. So for exit, we are just looking at the super trend. So whenever the color of the super trend changes, which you can see in this case is happening out here. So we took our first entry at this point and the color changed at this point. So whenever the color of the super trend changes, we are basically triggering an exit. The exact opposite is happening for our short entry. So the short entry is basically looking at a close below 20 EMA. It is looking at the super trend color being red. Now, for example, out here, if you see carefully, out here, the exact same thing is happening. So our super trend color has changed to red and at the same time, our close is basically below the 20 EMA. So whenever this happens, we are taking a short trade. Once we have a short trade, we have no target, no stop loss. We are just looking at the inverse condition, which is that the close is above super trend, which incidentally happens out here. So whenever close is above super trend, which means the color of the super trend changes, at that time we are basically triggering a close for the bear call spread that we have taken out here. Now, incidentally, with these conditions, there are some other types of logics that are being added. The logics that are added are that we are also looking at what is the distance from the expiry that we are currently at. So let's explain and let's understand this in a little bit of detail. What Riyaj says out here is that since we are option sellers, we will want that we are collecting as much premium as possible. Now, how will we collect as much premium as possible? We will collect it only if we are farther away from an expiry. So as per the logic that he's given, it is that if we are on a Friday, then we are allowed to take the current week expiry or the latest week expiry. If we are on a Monday, Tuesday, Wednesday or Thursday, in that case, we are not trading in the weekly expiry, we are trading in the next weekly expiry. So to give you an example, let's say if I am on the 22nd, which is a Thursday, I am not going to trade in the 22nd expiry. So whether I am on, let's say, Monday, Tuesday, Wednesday, Thursday, I am going to look at only the expiry, which is of 29th Thursday, and not of the 22nd Thursday expiry, because we are looking at weekly options out here. So every Friday is basically the current week expiry, and every Monday, Tuesday, Wednesday and Thursday is basically the next week expiry that we are going to look at for our entry trade. Now with that understood, we also need to understand that whenever we take a trade, we will also want that our trade is basically exiting every time we have the weekly expiry come in. So let's say if I trade something with the expiry of, let's say, 29th, I don't want the strategy to stay after the 29th entered into a strategy. So I will build my universal exit conditions in such a way that if I'm taking a trade in one instrument and that instrument's expiry comes in, so we will want our automated setup to exit only after that particular expiry has happened, or the exit has been triggered, which means the super trend color has changed. So now with that understood, let's go to Tradetron's strategy builder and see how exactly can you build this strategy using the condition builder of Tradetron. Before I show you how I built this strategy, I'll show you how you can duplicate this strategy without any effort by using the link that I've shared in the description. So in the description, you will find this kind of a link. Just copy this link, paste it on your browser, or just open that link. When you open that link, you will come to a page like this. In this page, you can just click on duplicate, and this same strategy will be visible in your account, in your Tradetron account, as a strategy like this. Now, once you duplicate it, you will be able to edit this strategy, and this strategy can then be backtested, deployed, and tested. So when you deploy a strategy, you're basically running a paper trade execution for the strategy, and you can now see how that strategy is performing live while the market is running, and maybe choose to run it live with a broker and have real trades fired if you so like, and test the strategy well. For now, let's now get into how the strategy is actually built. Now in this strategy, broadly, when I look at it, I have two different types of logics that I'm trying to implement. First type of logic is that I am looking at a long entry and a short entry. So either I have a long trade or I have a short trade, and I have a square off for them. So both my two conditions are separate, where I'm looking at long or short, right? In addition to that, I also have one type of logic, which is that on a Friday, I'm looking at the current week expiry. On a non-Friday, any other day, I'm looking at the next week expiry. So obviously, for these four different situations, one is that I'm on a Friday and I have a long trade. The other is that I'm on a Friday, I have a short trade. Third is that I'm on any other week, but I have a long trade. And the fourth one is that I am on any other day, but I have a short trade. So for these four conditions, four different types of logics, I will make four different sets, right? My set one is for my Friday long trade. My set two is for my Friday short trade. My set three is for any other day as my long trade, and for my set 4 is any other day but for my short trade, right? And for each of them, I have their exit conditions as well. So I have a simple strategy, entry and exit in each of the different 4 sets, right? Now let's look at the 4 regular days other than Friday. What conditions have I built, right? Now my conditions first is to check that it is not a Friday. So when I do weekday is not equal to 5, I'm basically making sure that today is not a Friday. With that, I am now checking if close is greater than EMA. Why am I looking at close greater than EMA? That is my logic. if my candle's close is here and the EMA line is here, that means there is difference between the close and EMA, or the close is higher than EMA. In that case, I will want to take my trade, right? And all of this is happening in a 1 hour candle. So when I select position, in position I select my keyword as close. Within close, in my symbol, I'm selecting 1 hour as my candle time frame, and I'm looking at my instrument, which is NFO and Nifty 50. Why am I selecting NFO? Because I want futures and options. Why am I selecting Nifty 50? Because I want index. Now, when I keep everything out here empty, it is basically telling me that it is looking at the Nifty spot chart out here. Now, I am comparing this with the EMA. So in EMA, I have selected my period as 20, and then I am basically building my condition. Now with that, I have one more condition. If my close is more than my super trend, this indicates that my super trend is green, and that is when I will basically be taking my trade. So this is my broad entry logic that I have. Now what am I doing upon entry? Upon entry, I want to basically short a put, and I want to buy a put, right? Which put am I buying? I am buying a put which is at a strike price of 25 delta, right? Now we know that in puts all the deltas are negative, so I'm going to use this keyword called fine strike out here, and within fine strike I'm going to look at the next week expiry, and I'm going to look at a value of minus 0.25, which is what I'm going to buy for my trade out here, right? Now with that, I am going to sell a particular option. Which option am I selling? I'm selling again a fine strike with next week expiry, but the delta is basically a 0.4 or a negative 40 delta put option. Once I do that, I will go to my exit conditions. My exit conditions is doing the opposite, where I am looking at a close which is below the super trend. So these two are my long and exit conditions for the same. Now the exact opposite is happening for my call options, where I am looking at the close below the 20 EMA, super trend is red, and based on that I am basically taking my long and short trades out here. Now again, I will not go too much in depth on this strategy. Now again, I'll not go too much in depth on this strategy, and good for you, because we are coming up with the advanced strategy building course, in which we go crazy in depth about learning different types of strategies, how you can create what you're thinking about in the Tradetron advanced strategy builder, and about the different type of things, different types of loops you can create using the strategies on Tradetron. So do check it out if you're interested in the advanced strategy builder. Coming back to the strategy, once I have all my 4 conditions built and my positions built within my 4 sets, I now have some universal exit conditions. Now my universal exit conditions out here are doing broadly 2 things. One, it is checking if for a time that at 3:15 I want to exit. And second, what it is checking is that I have made certain flags out here. Now these flags are basically something that are variables, and using these variables I can make sure and I can get to know which set is currently open. So I am checking that if the instrument, the expiry of that instrument. So for example, let's say I take a trade in 29th May expiry options. I want that when 29th May comes, at 3:15, my instrument should get exited even if super trend has not changed its color. So what I'm doing out here broadly is that I am making sure, first I'm checking is that particular set open, and second, which by open I mean does it have an open position, and second I'm checking that the expiry of Nifty and the expiry of that particular instrument that I have traded, is it the same thing? If it is the same, then my universal exit will get triggered, and all the positions that I have traded will basically get squared off from my strategy. Well, that's it for this video. Thank you very much for watching this video till the end. I would love it if you would like, comment and subscribe to this video. It helps us reach more people, and do share this video with your friends and share how you have also shared and built the same strategy on your Tradetron account with your friends as well. So thank you very much for watching. Until the next video, goodbye.